This video will focus on chart patterns, specifically the double bottom pattern, which is a very prevalent pattern. Not as prevalent as the cup and handle, but when you do see a good double bottom, it portends a nice future. According to Investors Business Daily, a double bottom base really looks kind of like a W. You'll see that once a stock makes a nice climb, that starts the left side of the W. Then it goes down to a low point where the sellers are basically flushed out for the first time. Some buying comes back in until it gets to the midpoint of the W there, and then there's more selling. And that selling drives that second leg of the W down even below the first leg. And the reason it does this is because it shakes out the weak holders, the people that can't stand to be in it because they think it's going to keep going down. And once it flushes them out, now the stock is ready for a nice ascension, and you'll see it crossing that midpoint of the W. Right around there, plus 10 cents, is where you want to start placing your buy orders. And if you look at some charts, you see how the double bottom pattern portends a very nice breakout. To illustrate a double bottom pattern, let's take a look at what else? Apple Computer. Here is the stock with a double bottom on the left side, and you'll notice that it's set up almost perfectly. It had this left side that went down for 5 weeks, hit a bottom, then it went up, made a top, forming that apex of the middle of the W, and then the next 5 weeks it went down again, and it went down just slightly below to shake out those weak holders on fairly light volume, which is a key thing. And then from that point, it took off the middle point of the apex, add a few cents to that, maybe 10 cents, and that's your buy point. Well, you look at what happened from that double bottom pattern. The breakout point was at about $266 on the double bottom. The stock ended up going from that point, $266, to about $705 before it started to make a big correction. Here's a chart of Schwab. Now, this is a daily chart, but it looks pretty much the same as the weekly. Your job is to find out where the double bottom is. Go ahead, I'll wait. Here's a hint. It's on the left side of the chart. Well, did you get it? You have to figure out where the W pattern is, and with the second leg of the W pattern being lower than the first leg. Let me help you out here. You see how on the left side it kind of comes down over the course of 3 weeks or so, and then for the next 3 weeks it kind of makes that apex, drops down a little bit lower over the next 2.5, 3 weeks, and then again, a nice steady climb all the way up to the breakout point, which is the apex of that W. And by the way, we try to look for symmetry in the markets. That means there's orderly buying and selling. It's a little bit more predictable when you have symmetry, especially when it comes to a double bottom and a cup and handle, by the way, as well. And look at what happened to the stock after we got that breakout from the bottom. It went from the breakout point all the way up into the mid-20s, which is a pretty nice return in that shorter period of time. So hopefully by now you agree with me that a double bottom pattern is an excellent pattern to be able to determine a proper breakout point on a stock.